This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on August 14th, 2014. To connect with Harold and speak with him about investing in alternative assets, hard assets, go to his website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. To speak personally and privately with Harold, call 1-800-432-1022. 1-800-432-1022. With our radio show, we are on the internet, and you can listen to us anytime you want at HESradio.com or rarecoloreddiamonds.com. We have a podcast through iTunes. Go to iTunes, type in the World Financial Report on Radio, as I did the other day, and you can listen to our shows there. You can also subscribe to the podcast. The shows will come on your portable device. We go anywhere you do. We have a very important, and this is the newsletter that goes along with our radio show. It's important that you get our free weekly newsletter. You'll be seeing the stories that Harold and I are talking about on a weekly basis through our free weekly newsletter. The World Financial Report on Radio newsletter, that's what it's called. If you're not getting the World Financial Report on Radio newsletter, you're not getting our newsletter. And you need to speak with Harold about getting your name on our list. We send it out via email free of charge every week. If you would like to receive it, speak with Harold, rarecoloreddiamonds.com or 1-800-432-1022. If you're receiving any other newsletter, it is not ours. And you want to get your name on the list for our proprietary newsletter that goes along with our show. So when you're listening to the show, you know exactly what we're talking about. You see the stories yourself. It was an interesting week. In fact, as we tape on a Thursday, just coming out, Europe, GDP numbers are contracting in Germany and France. If it happens another quarter, that means they are in recession. Italy is in recession. We know in Italy, youth unemployment, 43%. Some of these other countries like Greece, Portugal, Spain, you have youth unemployment at 40, 50, 60%. It's absolutely tragic. And yes, things may be good here in Alberta, and some people believe in the United States, although we don't agree with that. But if you take a look at what's happening in Europe, it is a tragedy to say the least. Also, in Argentina, the bond default continues. They still have not straightened that around. And after we taped the show last Thursday, U.S. President Obama came out and said that they would actually be doing some bombing in Iraq as they go after ISIS. And this ISIS group is, people talk about Al-Qaeda. Well, ISIS seems to be just as dangerous, and they seem to have major control over Iraq. And that is very unsettling. Also, the Ukraine and Russia story continues. Israel and Hamas, China and Japan are fighting over islands in the Pacific. You add into that the Ebola situation, and it's just a real unsettling time. In fact, the U.S. Secretary of Defense, Chuck Hagel, came out and said in a story that the world just seems to be really all on fire because there's just so much turmoil all over the world. And in our newsletter this week, we have a chart. Food inflation. Breakfast is up. If you go out and buy a breakfast is up over 24%. If you go through our chart, we can get it to you via our free weekly newsletter. You'll see that cocoa is up 8%, coffee 72%, butter 18%, wheat 12%, milk 21%, orange juice 12%, sugar 6%, pork, bacon, 42%. All of that equals 24%. And yet, Harold, they tell us there is no inflation, although we do not believe it.
No, we definitely do not. In actual fact, if you look at inflation, since 2000, since January of 2000, a barrel of oil has gone from $24 to over $100, up 314, almost 315%. Fuel oil up 242%. A gallon of gas up 176%. A dozen eggs up over 106%. Healthcare up 104%. Ground beef is up 96%. A movie ticket up 95%. So you're getting the idea. The fact is that there's huge inflation. And add that to the fact that U.S. wages are down 23% since 2008. U.S. jobs paying an average of 23% less today than they did before the 2008 recession, according to a new report released on Monday by the United States Conference of Mayors. In total, the report found $93 billion in lost wages, jobs lost during the recession paid an average of $61,637. As of 2014, jobs in the same sector paid $47,179. So you're looking at that wages have dropped by 23% in the last 5 or 6 years. Add that to the fact that inflation is absolutely skyrocketing just by what we proved this morning with the charts that we have, and these are all in the newsletters, so you can verify everything. And basically, what it means is that if your wages are falling or staying the same that they are, but the cost of living is going up, that's inflation. Now, it's always been that hard assets like gold and silver are a hedge against inflation. In fact, in 1979 and 81, we had high inflation. Gold went from $125 all the way up to $850. Silver went from $1.25 to $50. So inflation is one of the key factors why you want to be in hard assets like gold, silver, diamonds, those type of investments. They've got a proven track record, and that's why we offer these type of investment opportunities to our clients, because there's no doubt where this economy is heading to. You know, you can listen to Wall Street and you can see the stock market going up and think that everything is okay, but everything isn't okay. And it was just proven this morning just by the inflation numbers that we just gave to you. If your income is dropping, but your cost of living is going up, that's inflation in its most simplistic but honest form. And that's exactly what it is. We have to make our dollars stretch that much more if you're not in investments that are compensating for that. The reason that you invest in hard assets like gold and silver, as an example, is because they're a proven hedge against inflation. As inflation gets higher and higher, the price of gold and silver will go higher and higher. And that's why we've recommended this. We recommended this market back in 2000 when we felt that inflation was just going to really get started. And gold was at $250 and silver was under $4. And look where those markets are today. Even with what's happening in the markets, even with the manipulation that's happened thus far, you still have gold that's gone from 250 all the way up to 1,300. Even though we saw the highs of the market at 1,920 back in 2011, the market is still doing extremely well at 1,300. It's building a strong base again. There's no doubt that inflation is going to move this market. The other thing that's going to move this market is interest rates. The fact is that interest rates are basically at zero right now, which is why the stock market has moved higher. So those that have a lot of money, borrowing power, great credit ratings type of thing, they borrow money at almost nothing, 1 or 2%, and then they put it into the market and they heavily leverage themselves. And when the market's going your way, that's great because you're making money and you're leveraged and you're taking a huge risk. Well, we all know what happens to leverage when the market starts to go against you. And when that happens, you can see your money disappear very, very quickly. We're in a very, very scary time right now because what they're saying in the United States, you know, they try to portray a bullish attitude. But the big problem is Europe right now because Europe is heading into recession. Italy's in recession, as Randy mentioned at the beginning of the show. And the fact is that as Europe goes into recession and China goes into recession, it's going to draw the United States back into recession. So, again, we're looking at a situation right now that the markets aren't responding to what is obvious in the market right now, but there's no doubt that it will. And the fact is that you don't trade hard assets. You don't trade gold and silver. You buy it and hold it. It's a hedge against your money not working for you. It's a hedge against buying power of your dollar. So basically, if you hold physical gold and physical silver, and you want to hold it yourself, you don't want somebody else holding it for you. You want to take possession of your metal. You want to have it just in case you need it. And the fact is that we are going to see interest rates start to move higher. The government knows and the Federal Reserve knows that we have to raise interest rates, but the biggest fear is when you raise interest rates to fight inflation, what happens is that it's going to affect the stock market and it's going to affect the real estate market, because interest rates affect both of those markets in a huge way. So you've got a stock market in the United States, the Dow, that has rallied to close to all-time highs at a time when the economy doesn't dictate that it should be doing that. The economy is lethargic in the United States, and basically all you have to do is watch one stock, which is Walmart. Walmart will tell you how the United States is doing. It'll tell you how the middle class is doing, because the middle class shopped, or, primarily at Walmart. Now what's happening is that the middle class, which is losing all of its buying power, is starting to shop at the dollar shops. So basically what you're finding is that people are looking for a way to stretch their dollar, because the cost of food is skyrocketing. As Randy said at the beginning of the show, breakfast is up, almost 24%. And the fact is that people's wages are dropping. So this is a very dangerous situation if you just sit there and don't do anything. If you don't do anything, what you're going to find is that you're going to go into an inflationary cycle with nothing to make you money. All you're going to do is pay more and more for food and your living expenses and all that, but you don't have anything to offset that. And that's why we've always recommended gold and silver to you, because gold and silver are a hedge against inflation. As inflation goes up and the price of gold and silver go up, it's going to compensate for the increase in your living expenses. That's why you invest in that type of product, because it's got a proven track record, especially during times of high inflation. And again, when you're looking at a barrel of oil in the last 14 years has gone up over 314%, that's substantial, especially if your income, if your wages are not going up to meet those increases. So that's where the major problem is going to lie. The summer is slow in all markets. The markets are lethargic. There's not a lot of traders around, but we're starting to get back soon. We're in August now. We're going to get back into September. The kids are going to get back to school. Everyone's going to get back to work. The markets are going to start to heat up again. And as as Europe goes into a recession, which it appears that they're going to, it is going to affect the U.S. markets and the other world markets, because everybody trades together. So these are very, very concerning times. You look at the geopolitical situations, and there's more happening now than probably almost any other time in the last 10 or 15 years. So that's a major concern. As money starts to get tight, countries start to fight, and anger starts to happen, and things start to happen in the marketplace. So I'm very bullish on this market. In fact, I'm going very, very heavily into 3 markets myself, which I'm already fairly heavily invested in, but I anticipate getting much heavier in. Physical gold, physical silver. Silver is a steal at $20. It's at 19 and change this morning, 1980. There's no way in the world that silver's not going to go back to 50, and there's no way, in my opinion, that silver's not going to get into the triple digits. We're going to have massive inflation moving forward, and they're going to be afraid to raise interest rates, because as soon as the Fed raises interest rates, you're going to see what happens to the markets. And don't forget, the last time we had massive inflation in 1980, what followed the massive inflation, just to prove that I'm right, is 22% interest rates. And most of us remember that. If you're in your 50s, 60s, 70s type of thing, you remember 1980, 81, and 82, when the governments had to raise interest rates so substantially to fight inflation. And let's face it, we've got heavy inflation now. The government's not admitting it, but however, just look at the numbers that are in the newsletter this morning. So I think that we really need to get smart right now. You look at the markets and you say, well, gold and silver are not doing it. They're sitting in a trading range. That's all well and good. But again, we're not trading gold and silver. We're buying it so we don't get wiped out financially when the inflation markets hit. And if food and everything else is up this high, you need to own something that's going to offset that. When your cost of living goes up because of inflation, gold and silver will go up, and that's going to compensate for the extra money that you're paying. You need a hedge against inflation, and the best inflation hedge has always been physical precious metals. Now, there's certain diamonds also that are hedges against inflation. Yellow diamonds went up 500% in 1980. So again, I think that we're right on track. We need to be in the right markets at the right time. And if you're sitting in paper assets like stocks at this particular time, I'd be very concerned, because as the country goes back into a recession, you're going to see that the market that falls the most is the stock market. So again, Randy, at this particular point, I see nothing but bullishness in the hard asset market. And I think that going into the end of 2014 and moving into 2015, with what's happening in Russia, China, all over the world at this point, there's no better investment than gold, silver, and diamonds.
Speak with Harold about hard assets. The most secure and profitable investment, millions of years in the making, rare colored diamonds. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio, or receive a free copy of our weekly World Financial Report on Radio newsletter by going to rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022, and ask Harold about investing in gold and silver as well. And it was interesting to note this week, Richard Russell came out with a statement. My current recommendation is, very similar to Harold, is that my subscribers buy physical silver. Silver, currently under $20 an ounce, is dirt cheap. Get our free weekly newsletter. Also, listen to our radio show on a regular basis. Keep yourself up to date what's happening on the financial markets. One of the stories this week we have in our newsletter, and it's a must-read. We will send it out to you. Jeff Clark from Casey Research. The top 7 reasons I'm buying silver now. When considering the catalyst for silver, let's first ignore short-term factors such as net short-long positions, fluctuations in weekly ETF holdings, or the latest open interest. Data like these fluctuate regularly and rarely have long-term bearing on the price of silver. I'm more interested in the big picture forces that could impact silver over the next several years. The most significant force, of course, is what I have stated, government's abuse of financial heroin. And he's talking about money printing. That will inevitably lead to a currency crisis in many countries around the world, pushing silver and gold to record levels. Now get this from Harold this week. Top 7 reasons I'm buying silver from Jeff Clark. Number 1, and we will give you number 1. You can read the rest. Inflation. Adjusted prices have a long way to go. One hint of silver's potential is its inflation-adjusted price. And Jeff Clark asked John Williams of Shadow Stats to calculate the silver price on June 2014 dollars. July data is obviously not available yet. Shown is, and we have this chart in our newsletter, is the silver price adjusted for both the CPI-U, as calculated by the Bureau of Labor Statistics in the United States, and the price adjusted using Shadow Stats data based on the CPI-U formula from 1980. The formula has since been adjusted multiple times to keep the inflation number low as possible. The $48 peak in April 2011 was less than half the inflation-adjusted price of January 1980 based on the current CPI-U calculation. If we use the 1980 formula to measure inflation, silver would need to top out at $470 to beat that peak. Now, Clark says, I'm not counting on silver going that high, at least I hope not, because I think there would be literal blood in the streets if it does. But clearly, the odds are skewed to the upside, and there's a lot more room to run for silver investors. One of the other, and you can see this chart in our newsletter, but I really encourage you to connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022 and get that Jeff Clark article, Top 7 Reasons I'm Buying Silver Right Now. Also, King World News had an article, Major Buy for Silver. A reminder from David P. out of Europe that his target for the initial pulse on silver is well over $60 after the buy signal was recently triggered on the long-term MACD chart, and that's technical analysis, moving average convergence divergence. So definitely take a look at that article as well. Harold, we have approximately 3 minutes left in our segment here, but that is a must-read article, 7 Reasons Why. And when you go through all the reasons, they make such logical sense. And that's why you're saying Richard Russell, John Embry, so many others, now's the time to have an allocation of hard assets in your portfolio today.
You bet, Randy. There's no doubt in my mind that the market is going to go, but I have to really specify you need to own physical precious metals that you're holding yourself, not stocks in precious metals. They don't do well. You don't want to be in anything paper. This is a real problem. Moving forward with inflation, you need to own your assets. Gold, silver, and diamonds should be in your possession, not in somebody else's. So we're going to be able to bring to you physical gold and silver at spot prices in the very near future. I'm sending my partner to Cyprus next week to check out the mines to make sure everything is exactly the way that I see it. And if that all works well, we're going to be able to bring you physical silver at spot prices with no commissions, no financing, no spreads, no nothing that everybody else charges. All we want to do is make certain that when this market runs and inflation picks up, that our clients and listeners to this radio show are protected, and that's paramount with Randy and I.
Speak with Harold about investing in gold and silver, also diamonds. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. Get our free weekly newsletter as well. And one of the quotes we have in our newsletter is from Michael Belkin. And he is a person who he advises hedge funds and high net worth clients and mutual funds, money managers about their money. And it's shocking to hear what he has to say. And this is one of the things that we've really been hearing a lot about from top flight money minds, is that the stock market could be headed for a major, major drop. We've heard that from Mark Faber in the past. And Belkin said, I do a Google trend word search. It tells you the number of times people have looked for a term, and when you do that on the term speculative bubble, it doesn't even register. In July, 0. Hardly anything in the headlines of news stories about this. I consider this to be the biggest speculative bubble of my career. And he's talking about stocks and bonds and real estate. Beyond 2000, beyond 2007, this is the everything bubble. Junk bonds, stocks, tech stocks, you name it. Everybody is in here for one reason and one reason only, because interest rates are at a record low. That's the definition of a speculative bubble. It's created by phony interest rates. So when things start to go down and you start getting redemptions, and he's talking about mutual funds, the market could fall 20 to 30% very, very easily. And that is from a person who consults hedge funds, money managers, Michael Belkin. Speak with Harold today. Have that insurance policy in your portfolio of hard assets. We're talking about rare colored diamonds. Harold's website is rarecoloreddiamonds.com. To connect with Harold, speak with him at 1-800-432-1022. That's 1-800-432-1022. Harold is going to be on Fox Business News, Risk and Reward with Deirdre Bolton coming up on August 25th. As well, Harold was recently on the Jerry Bonino show, Eye on Aspen, and we will be happy to send that interview out to you. It is a must-watch. Speak with Harold about getting those interviews and investing in hard assets today. RareColoredDiamonds.com, 1-800-432-1022 to speak personally and privately with Harold Siegel. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 14th, 2014. Our time is 9:04 Mountain. Our radio show runs on your favorite radio stations. Also, the shows are archived on Harold's two websites, HES Radio.com, RareColoredDiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us. You can listen to the podcast there as well. You can take it on your portable device and listen to us at your pleasure anytime you want. To connect with Harold, his website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, and you can speak with Harold personally and privately. He has an open invitation for any of our radio listeners to call him and speak with them about their financial situation and hard assets, gold, silver, diamonds. 1-800-432-1022, 1-800-432-1022. Harold's auction website is hsfineauctions.com, and we will have more auctions coming up later on this fall. We will let you know about more than likely in October. Our featured diamond of the week is a point, and this is a 1.07 carat, pear-shaped, fancy, vivid, yellow, internally flawless. An absolutely gorgeous yellow diamond, 1.07 carat, pear-shaped, and the pear cut is really one of my favorites. In our newsletter this week, we have some outstanding stories, and one of them is on the Argyle tender. Rio Tinto is coming out with the Argyle tender, and we have an outstanding story on that. As well, a blue diamond worth $25.6 million. Story on that, and why the United States doesn't want to ban Russian diamond imports. Of course, we know that the United States is sanctioning Russia as we speak because of what's happening in the Ukraine, but they are not banning Russian diamonds. And one of the reasons, if you read this article, is diamonds could actually just go absolutely crazy price-wise if they did. But Harold, lots of good news this week in the diamond world.
Oh, you bet. There's some beautiful red diamonds that are coming up for sale that are the rarest diamonds in the world. Blue diamonds are just hitting records almost every time that they go to auction. It's really a phenomenal thing. You know, when we brought this up almost 10 years ago, nobody even really talked about colored diamonds. Nobody knew anything about them. And look what's happening in this market in the last decade. I'm just absolutely shocked and pleased as to how much these diamonds are going up in value. So again, they're a great investment. They're portable private wealth. They never decline in value. And the fact is that they're beautiful. So, I mean, where could you ever get an asset like this? You buy a beautiful diamond, investment quality diamond through us. In a lot of cases, we put them in magnificent ring settings, necklaces, earrings, that type of thing. You could wear these beautiful pieces for the next decade and then give them back to us to sell, and we'll sell them for you at a profit. We only get paid if you profit. We get 10% of the profit when you sell your diamonds through us. We own another company called H. Siegel Fine Auctions, which is the only company of its kind. It's a virtual auction business that is gaining tremendous publicity, because we've been on Bloomberg 4 times now because of our auction business. And now, as Randy mentioned, we just got invited on Fox News on a brand new show called Risk and Reward with Deidre Bolton. It's going to be a phenomenal show, and they wanted us to come up on August the 25th to do a large interview. So the diamond world is on fire. And the fact is that there's so few of these diamonds available that they're just a great investment. They're much better than stocks. You put them away for the longer term, and you can depend on them. You know, if you put $20,000 into a mutual fund and put it away for 10 years for a retirement type of thing, you could make money, you could lose money, you could break even. You know, who knows what's going to happen with the stock market. But you put $20,000 into a yellow flawless diamond that increases by 15% a year, and in 10 years you've got back about $75,000. So basically, it's a hard asset that can go into your safety deposit box in your safe at their home, or put it on your wife's finger. Let her enjoy it, and then give it back to us to sell, and we'll sell it for a profit down the road. And the fact is that diamonds just keep going higher and higher in value because there's so few of them. You know, blue diamonds, we'd be lucky to see a blue diamond come onto the market in 2 or 3 or 4 years. So very seldom will a blue diamond come onto the market, just like very seldom will you ever see a red diamond. What makes a diamond blue is the mineral boron. So basically, 99% of the diamonds that come out of the ground are white diamonds. However, if boron seeps into the ground and turns this diamond blue, it could turn a $20,000 diamond into a $2 million diamond. That's how valuable colored diamonds are. So again, alternative investments at this particular time are probably the most important thing that you can invest in, because we've all been through 1999, 2007, and 8, and what's probably going to become this year and next year are major declines in the stock market. That every time the market gets back to your break even or you're slightly ahead, the market takes another big drop. A lot of the top analysts right now are predicting that the stock market is getting ready for another major drop. That means that if the Dow is sitting at around, 16.5, 17,000, and this market drops by 30 or 40%, which it could easily do, then you've got another fighting battle. You've got to wait another 3-4 years possibly for that market to come back. Why in the world we keep doing this is hard to believe, because again, you've got a stock market right now that is going up in value when you've got an economy that is not doing the same. So how in the world does the stock market increase when the economy is going backwards? It just doesn't make any sense. Again, it's all playing with the numbers. It's all putting money into the marketplace and cheap interest rates and basically 1 or 2% interest rates. And as I mentioned earlier in the show, if you have a phenomenal credit rating and you've got the guts to do it, you can borrow money at next to nothing, put it into the market, leverage it, and if the market goes your way, you're going to make some money. But if the market does drop, you could lose everything that you own. We do not recommend in any way, shape, or form that you do that. Now is the time to be conservative, not take unnecessary risks. And seeing that the market has gone from, when it dropped from 14,000 to 6,500 in 2008, so it's gone from 6,500 all the way up to 17,000. It's gone up substantially, but none of that is based on a strong economy. It's based on cheap money and cheap interest rates, and those are going to end soon. And as soon as they end, what do you think the stock market is going to react? They're going to react in a negative way because they're used to cheap money and low interest rates. Once interest rates start to go up, the stock market will fall and fall substantially, as will the real estate market. So basically, those situations don't affect diamonds. And if we're going to have inflation, which we definitely have, you need to own gold and silver for that. So there's no doubt that hard assets are the way to go, and hard assets are going to make you the money that you're going to lose in other areas. Because when interest rates go up and inflation really kicks in, you're going to lose on your stocks and you're going to lose on your bonds and you're going to lose on other investments like that. But it's your hard assets that are going to make you the money, and that's what's going to keep you alive financially when this hits. And there's no doubt it's hitting right now. It's just that the government is not admitting to it, and Wall Street just doesn't care. As long as it doesn't come out in a report type of thing, they're going to continue to do what they're doing. They're going to trudge along. They're bullish on the market. They've got cheap money. If you know how to make money with low interest rates, you're going to do well. But most people don't, and most people that I know are not taking the risks of being in the market. So I'm very comfortable with 3 markets at this point. One is gold, physically, own it yourself, don't let somebody else hold it. Silver is ridiculously priced at below $20 right now. There's shortages in silver, and there's no doubt when inflation really starts to pick up that silver is going to take off and run. Don't forget, silver went to $50 twice already, and we believe silver is going to go to $100. If you can buy it at $20, that's a 500% return on your money. And we're going to be able to sell to you physical silver at spot prices with no commissions. You're going to be able to buy silver, let's say at $20, and if it goes to $20.10, you're 10 cents in profit. And that's the way we want it to be for our clients, and that will be coming to you very soon. I'm sending my partner out to Cyprus next week to check the mine out, to make sure everything's fine, to make sure all the silver is there, that it's all 0.999 silver, and as long as that all goes well, we're going to be able to bring to you, just before what we feel is the next major bull market, we're going to be able to bring you gold and silver at the best prices that anybody could buy. And that's what we want for our listeners to the show. We want to make certain that when this market runs again, that we have the best opportunity to make the maximum returns on our money. And there is no doubt, all you have to do is read the newsletter and see what's happening in diamonds. Diamonds are skyrocketing with everything that's happening between the United States and Russia. And as much as they hate each other, and as much as Obama hates Putin, the fact is, and they're bringing sanctions against almost everything that Russia does, but the one thing they will not touch is diamonds. Because if Russia wants to get smart and wants to hurt the world as far as diamonds go, they're the largest producer in the world. They own Alarosa, which is the largest diamond mining company in the world, bigger than De Beers, bigger than Rio Tinto, bigger than anybody. And if they hold their diamonds off the market, wait and see what happens to the price of diamonds. They will literally skyrocket. And Russia has done this before. They've done it with palladium. When palladium first came out, and we started trading palladium at around $70 an ounce, that was way back about 20 years ago, palladium went all the way to $1,100. And that was because Russia controls that market, and Russia just held it off the marketplace. Made it go from $70 to $1,100. They could do the exact same thing with diamonds. In fact, these sanctions against Russia are not hurting Russia that much. In fact, Russia is okay with this. It's the other countries that deal with Russia that are having the problem. So I don't like what's happening geopolitically in the world. Obviously, I'm very concerned about Israel and Hamas. That's a very dangerous situation and not a good situation for any of us. Whether you're Jewish or not, Israel is our protector in the Middle East, and if Israel wasn't there anymore, that would be a disaster area. So we certainly do not want to see anything happen to Israel, and every single president up until now has backed Israel in a huge way. In fact, Hillary Clinton, who's probably going to be running for president in the next election, is against Obama, and she's absolutely infuriated, and it came out in several reports that he's doing this, that he's not backing that the United States is not backing Israel for the first time ever. So again, there's a lot of things happening that are going to affect us moving forward. The best advice I can give you is to do, and I know what I'm doing, and that's what I'm letting my clients know. I'm reducing any risk that I have in the market at all. I have no paper assets whatsoever, no bonds, no stocks, no nothing. And all of my assets are in safe assets, what I feel are safe: gold, silver, and diamonds. Diamonds is my major business, but I've also very heavily invested in silver and anticipate getting much heavier once we visit this mine next week in Cyprus. And if everything checks out, we are going to bring our Canadian clients all the opportunities to buy gold and silver physically and be able to take it home, deliver them directly to them, and charge you spot prices, which means spot prices are what refineries buy at, and we're not going to charge you a commission. So why in the world would we do this and offer this and go into the gold and silver business and not make any money from it? Because it's imperative at this point that we get set up for what's coming. And again, it isn't always about making money. I believe that in the future, when the markets do what they're supposed to do, we'll gain our rewards too. So basically, we're going to be able to bring to you physical gold and silver very soon. We're just going to visit the mines next week, and if everything looks great, we're going to go through with that deal. We're going to be very, very happy to be able to deliver directly to you physical gold and silver. As far as diamonds, we deliver diamonds directly to you. They're the most beautiful assets. They're portable private wealth. And we bring them to you at amazing prices. And we do that because when you go to sell it, we both profit in it. We're partners in the sense that when you go to sell your diamond, we get 10% of the profit and you get everything else. So, Randy, I couldn't be more pleased with our situation. I've been in business 35 years, and again, I know that the last 3 years have been tough in the metals markets, but the bottom line is that these markets are not going to stay down much longer, and obviously with the inflationary numbers that we saw today, because of the phenomenal newsletter you put together, there is now no doubt, and there should be no doubt in anybody's mind, what you need to do to protect yourself moving forward in these markets.
Our featured diamond this week is a 1.07 carat pear-shaped, fancy, vivid, yellow, internally flawless diamond. We've talked about it before. If you're starting to build your own diamond portfolio, that would actually be a nice cornerstone for the color yellow. And connect with Harold, rarecoloreddiamonds.com, and you can speak with him personally and privately, 1-800-432-1022. Go to the website, rarecoloreddiamonds.com, and take a look at our featured diamond of the week. What a great way to start a diamond portfolio by investing in that rare colored diamond. Get the stories we have in our free weekly newsletter as well. In fact, as Harold touched on, 4 extremely rare red diamonds are now for sale. Rio Tinto has unveiled a record 4 extremely rare red diamonds in its exclusive annual sale, with the miner saying there was growing interest in the jewels as collectibles and alternative investments. The diamond tender, with stone sourced from Rio's Argyle mine in Western Australia, will be comprised of 55 diamonds. Think about that. 55 diamonds for the whole world, including 51 pink and purplish reds and 4 fancy reds. The hero jewel at the center of the sale in its 30th year is the Argyle Cardinal, a 1.21 carat radiant cut fancy red, obviously named after the bird. The jewels routinely fetch $1 to $2 million a carat US. As a basic rule of thumb, pink and red diamonds are worth about 50 times more than white diamonds. In the 3-decade history of the yearly sale, only 13 fancy reds have been put up on tender, and there are fewer than 30 graded by the GIA in the world, according to Josephine Johnson, who is the manager of Rio's Argyle Pink Diamonds division. And she said, our traditional markets have been usually Australia, Japan, the United States, Canada, and Europe. However, in the last 3 to 4 years, we've seen the emergence of particularly India and China. And we are now seeing that around 50 to 65 diamonds each year really go quite equally to all corners of the globe. And she says there's also increasing interest in fancy colored diamonds from financial institutions. 5 years ago, I would have said that maybe 10 to 20% of our diamonds went into collections and never left the box, held in a vault somewhere. Now that is more than half. And the level of inquiry that we get around our tender quality diamonds from banks and investment houses has certainly increased over the last 2 years. And Harold, you were at the forefront of that. In fact, in August of 2005, you wrote a report, Naturally Fancy Colored Diamonds, the Best Kept Secret. And it's amazing how so many other people have come to your realization, including Argyle, as they see diamonds, rare colored diamonds, as an investment as well. So we congratulate you on that. And I know that you have Argyle tender diamonds that are in your vaults. And we have many museum quality diamonds in Harold's vaults. And if somebody is interested in investing in an Argyle tender diamond, you have them.
I certainly do, Randy. You know, the thing is that if you could ever go back in time, this is something that you would have wanted to do 10 years ago. There's no doubt that pink diamonds have just skyrocketed in price. And from this point on, for the next 10 years, because the mine is going to close in 6 years, means that there's not going to be any more pink diamonds because this particular mine, the Argyle mine, produces 95% of them. By the time this is over, in the next 6 to 10 years, the price of these pink diamonds, especially these tender diamonds, can increase 1,000% from where they are right now. There's no investment that I know of that is as safe as diamonds and can give you the return. So if we could turn back the hands of time, and if we could have gotten into the pink diamond market 10 years ago, and I've been in that market, that the returns are just astronomical. There was a diamond that I bought in 2003. It was an Argyle tender diamond. It was a 2-carat, fancy, vivid, purplish pink Argyle. At that point, it was expensive. It was $350,000. I went to the Argyle tender in New York. I viewed all of the diamonds. After I viewed the diamonds, this was one of the diamonds that I bid on. I bid $350,000, and I won this diamond. That diamond today is worth almost $4 million because a vivid pink Argyle diamond is worth anywhere from $1 million to $2 million a carat. And before this whole thing is over, and people, may say, how high can these markets actually go? Well, the fact is that just look what happened with blues. In 1994, there was a vivid blue diamond that sold through Christie's auction house for $2.5 million. Last month, that same diamond sold again for $17.5 million, and it was scooped up right away. There's a blue diamond worth $25.5 million being talked about today. So the fact is that, is there a lot of people that buy those type of diamonds? Of course not. Who has $25 million to pay for, a diamond? But there are people that do buy them. In fact, there's many investors that buy them because when these diamonds come up for auction, they're sold right away. So basically, these Argyle pinks are tremendous. I bought one 10 years ago for $350,000. That diamond's worth close to $4 million today. That's the type of return you want to see on your investments. And these are not unusual situations. Even the small little Argyles, 95% of them are below a quarter of a carat, but the most concentrated form of wealth in the world. And these diamonds go up tremendously because there's not going to be any more of them. So basically, even a quarter carat pink diamond that you may pay $40,000 for, that diamond in 10 years from now could be $300,000. And you may say, who's going to buy these diamonds? There are more wealthy people in the world today than there ever has been before. And the fact is that the rich are getting richer, and they are the ones that invest in these type of assets. Our auction website, H. Siegel Fine Auctions, is phenomenal because not only did it create the secondary market to resell diamonds, but we also use our auction business to raise money for charities. We support the Susan G. Komen breast cancer charity, which is a very important charity to me. And the fact is that we use our auction business to bring our products, our beautiful diamonds, to clients all over the world. At our last auction, we had people investing from China, Kuala Lumpur, Australia, Europe, Canada, and the United States. So basically, our auction business, which is the secondary market to resell diamonds, is becoming famous, and that's exactly what we needed, because the more people that know about our auction, the more people that will participate. And we basically have the next 6, 7, 8, 10 years to be able to, because nobody's selling their pink diamonds. Now, you can barely get a nice pink diamond anymore. There's brown seeping into the mine, so we know the Argyle mine is getting ready to close. We have a very good supply of Argyle pinks for our clients. These are the investments that you should be making. These are the diamonds that you should be buying and putting away for your future and for your kids and grandkids, because, again, there's no way in the world that the stock markets are going to return what these diamonds are going to return to you. And these are safe assets that don't trade on exchanges, so you don't get the volatility that you get in stocks and commodities. So, again, Randy, the Argyle diamonds are the best diamonds to own. I wish, again, we could go back in time so everybody would have a chance to buy them. But again, these are about the best investments that you will ever make moving forward, and the next 6 years are going to be tremendous.
Yes, it's really the most secure and profitable investment, millions of years in the making. Rare colored diamonds. Diamonds are nature's art. Private, portable, stable wealth. And Harold has some of the world's finest investment diamonds at his website, rarecoloreddiamonds.com. It's like going to a museum online, and you can absolutely see the most gorgeous investment diamonds there. As I mentioned before, it was 9 years ago in August that Harold wrote that first report, Naturally Fancy Colored Diamonds, the Best Kept Secret. And he was putting forward the thesis that we should invest in colored diamonds, and a lot of people thought it was a crazy idea. In fact, they thought that really the website, that was a crazy idea. But we knew that Harold was on the right track. He had made unbelievable calls in the markets prior to that on gold and silver, the euro, the oil market. And Harold was once again spot on when it came to investing in colored diamonds. He was the one who led the charge. And that's why we see today people investing in diamonds. And it is as nature's art, private, portable, stable wealth. And if you would like to learn more, connect with Harold at rarecoloreddiamonds.com, or speak with him at 1-800-432-1022. Our featured diamond of the week is a 1.07 carat, pear-shaped, fancy, vivid, yellow, internally flawless. And this is a stunning diamond. And if you were looking to start a diamond portfolio, this would be a perfect diamond to build a portfolio around. To me, there's just something special about the pear-shaped cut. I just love that cut. And if you were to put it in a ring, you walk in a room, you can't tell me that you're not going to be the center of attention. Harold, we have about a minute left. Somebody walks into a room with that on a ring, and trust me, it's going to get a lot of attention.
Oh, you better believe it, because vivid is the strongest saturation of color, and the stronger the saturation of color, the more expensive the diamond is. The chances of getting another diamond like this are very slim because it's such a rare diamond. It's internally flawless. The color is the best you can get, and the size is beautiful, and they go up tremendously. They go up 15-20% a year or more. So that's a phenomenal diamond. Some lucky investor will get that diamond next week. Again, diamonds are just doing phenomenal and about the best investments you can make.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold Siegel about investing in hard assets. We have Europe, the GDP numbers contracting in Germany, France, and Italy. Argentina, they defaulted on their bonds. That is still out there. Iraq, the Iraqi situation with ISIS. Also, the Ukraine and Russia, Israel, Hamas, China and Japan, Ebola. We're just starting to see all around the world, geopolitically and obviously economically, dicey times. And you want to have an insurance policy in your portfolio of hard assets. Get that free, and this is from our newsletter, Jeff Clark, Top 7 Reasons Why I'm Buying Silver. Get our free weekly newsletter from Harold and speak with